why don't we start anyway? We can have a conversation really bad. It lasts about, we think about 45 minutes of dialogue here and then 50 minutes for question. We can stay longer, obviously. Then it is as I say, a good cocktail party outside. So I'm not going to stand in front of you and the outside. Good afternoon. Welcome to all of our friends here. Federico Mennella. I am a managing director and run the chemical and materials business for DC Advisory. And so this session is really focused on chemicals and materials. And delighted to have one of my colleagues, Domenico Fortuna, and to distinguished panelists on this. We feel this is an important time to discuss chemicals and the outlook. It's a very different conversation today than the one I was hoping to have at the beginning of the year. We thought that this was going to be long last thing. A very good year for mergers and acquisitions and for the outlook for the chemical space. Turns out that things are at least delayed, if not in some ways changed, and we thought this was a good time to discuss it. In my experience, chemical companies make long-term investment plans, and they concentrate on things where there is clarity, there is certainty, and there is continuity in terms of management, in terms of plans, in terms of taxes, and of course in terms of tariffs and the like. And today we don't see a clean view, and so processes have been laid, some processes being put on hold, restructurings have been announced, but with different perspectives, and there are macroeconomic issues and global issues in terms of supply chain, in terms of grain and other parts, pricing issues, and of course the political consideration, not just in the US, but in other parts of the world. So we think that it's important to discuss how companies are adapting, where the opportunities may lie, and what signals may actually turn the M&A from yellow as it is today to green. So like I said, the people we have assembled, and I'm not just saying the people here, but also here at the room, I see friends who have been very involved in the space, who have been investors, who have been analysts, who have been advisors. So it's fantastic. That's in this conversation. So why don't we just have Domenico introduce himself, and then our panelists, and I'll let them introduce themselves so we can have start this conversation.
Well, I'll kick it off. I think many of you already know me, so I'll be brief, but Domenico Fortuna, I'm with Federico on coverage of the chemicals and materials space here at DC Advisory. I joined the firm last year, and I was previously at Rothschild, where I already partnered with Federico, working on the space, and where I was for over a decade. Before that, I spent time at JP Morgan in similar coverage roles. It's nice to see a lot of familiar faces today, and I'm looking forward to listening to our great panelists.
So,
sure. Yeah, I'm Vincent Valk. I'm a senior editor with Chemical Week magazine by S&P Global. I've been covering the industry for 15, 16 years, mostly focused on finance, M&A, macroeconomics, and specialty chemicals. Also do a lot of our digital initiatives.
sorry.
Silvestre Pires, managing partner at Advancy. I've been founded Advancy in North America 6 years ago, and spending most of my time in the chemical industry over the last 6 years, and even before that, over the last 15 years.
So maybe the first thing is to start with this very negative world, tariffs. I'm sure that people did not know what impact this would have, and more recently we've had it all over the place. So maybe I can ask Silvestre to tell us from his point of view, talking to a bunch of our clients, potential clients, investors, how have tariffs impacted the business and investment decisions, and how can you determine going forward to address this and to take that into account?
Yeah, for sure. I mean, I think we've all been living into the same ecosystem over the last 4 or 5 months. So, I mean, the biggest thing which happened, obviously, is the uncertainty on the tariff, not the tariff themselves. That's the way that we think about it. We'll talk about it a little bit later in terms of M&A activity and so on and so forth. But I think everybody entered 2025 with good hopes about it's going to be a good year, the year of the recovery. 24th was a little bit difficult, but it was a resetting, and 25 would be great. There's a new administration, pro-business, and so on and so forth. And so I think Q1 has been pretty okay, and there's been a little bit of sign of recovery here and there, and we'll talk about that later on. But obviously the tariff policy that have been put in place, or not put in place actually, post-Liberation Day, have been bringing a lot of uncertainty in the markets, and that's actually what has been impacting all of us in the investment community, as well as also impacting the business leaders in the chemical space, because people didn't know what was going to happen on their supply chain, the customers, if they were actually gonna have 10% of import duties or 20 or 30, and really the fact that it was changing not every day overnight, but sometimes overnight through a different communication media, but a lot of stress in the ecosystem and the value chain, and that's really what has been difficult to cope with. And so I think we'll talk a little bit later on about the impact that the tariff have had, but that's something that we can discuss later on. I don't know if you wanted to.
Yeah, I mean, I would echo that, Silvestre. I mean, the only thing I would add to it is I think really the industry is in a bit of a holding pattern with a lot of investments and big decisions. There's really kind of a wait and see approach, and maybe we'll get some clarity around this over the summer, if once the 90-day pause kind of lapses, but who knows?
Yeah, exactly. And now there's actually 2 pauses. There's the one for Europe,
right,
and now there's the one for China as well. And so again, I mean, nobody really knows what's going to happen with how Trump will cope with that, and how there would be.
And the uncertainty is really, you're absolutely right. The uncertainty is really the bigger thing than the tariffs themselves at the current time.
The problem also is that to the extent processes are on hold now, people are then going to have to wait until there is clarity on 2025, because you're not going to market that unless you have view on what your results here are, and therefore you then look at 2026, and then you have the valuation, because there are valuation parameters which are really difficult to predict. So how can you really truly value a situation? Some processes that were expected to start have been delayed significantly, and there are 2 other issues. One is that interest rates have impacted companies in our opinion. We see companies that had made a lot of assumptions about the EBITDA being this, the leverage being that, the interest rate being low or not significant change, and now not everything is subject. So this will change the IRRs and the returns. And the second thing is that we still have, at least in the States, when we talk about chemicals, it is an entire logistic chain that has been changed. And so there is the nearshoring, there is the obviously try to wait and see, but it takes time. It's not easy to do. So there is a supply issue. The States is more insulated. Europe, in my opinion, has been a more complicated situation. People have been worried about overcapacity. A number of large petrochemical companies have shut down or are closing plants, entire areas, or they're trying to sell businesses, but to no avail. So it's more problematic, because the energy issue there it's a fundamental issue, which the States is more, I would say, alleviated by natural gas and some of the supplies.
No, I agree. I mean, I know we're also going to talk about the long-term impact on the industry in terms of the tariff, and actually, I mean, echoing what you said, I think if you put the uncertainty aside, and again, we have a little bit of a balanced approach as well, depending on what company, what they do, where they're located, and so on and so forth. But there's also going to be positives out of the tariff, and actually that's going to obviously protect even more the US economy, and especially protecting it against what you were mentioning, which is the capacity addition. So again, we're going to talk a lot about that later on today as well, but I'm sure you've all seen that across your industries. There's been a lot of capacity addition in China over the last 2 or 3 years, especially the last 2 years. And now there is much more aggressiveness from Chinese in terms of prices across the globe, especially in Southeast Asia, also in Europe. And the fact that there is now, tariffs, which are put even more in place in the US, on top of the anti-dumping tariff in some cases, I think that's protecting even more the US economy. And that's going to be a clear positive, actually, of the current administration. Of course, there's going to be question about who's going to pay for the tariff and how it's going to flow through into the value chain. But at least there's a clear signal, I think, which is shared by a lot of decision makers in the US as well, which is, okay, we're going to protect ourselves even more. And if you're a US company producing in the US with limited raw material that you would be importing from abroad, and especially from China, I think those companies would be generating even bigger returns for the shareholders or for the founders in the coming years. And that's a very positive effect of the tariff, or what the tariff would become versus what's happening in Europe, as we're saying, where again we've been seeing a lot of price dumping from Chinese across the chemical industry.
Yeah, the only thing I would add to that is, I think, you're right, it's probably better to be a domestic US producer. And if you look at what a lot of the companies said in their Q1 earnings calls, there was a lot of emphasis about local for local production. We produce regionally, a lot of discussion about that. But I would say that, number one, the supply chains are very complex. Number two, the real issue, I think, is what is the impact on demand? And right now it's really hard to say. So even if you are a domestic producer that's mostly sourcing domestically, mostly selling domestically, the demand still, whatever the impact is on demand, is still going to have an impact on your business. And I think that is really the big question that is on the minds of the industry right now, and executives, people I talk to in the industry, is really, what impact is this going to have on demand?
Yeah, at the macro level.
Yeah.
Yeah, I agree.
Maybe to follow up on that, clearly the uncertainty is still very high, the amount of tariffs that will be, the structure and everything,
Sure.
and what would be impacted. But through everything that we've gone through, up to today, is your perception that changes have already happened in the industry? Maybe companies have had to make decisions that whether or not, maybe even if every tariff is cancelled tomorrow, there's some permanent changes that in any event will remain and determine maybe the performance of the industry or certain players in the months and years to come.
What we've seen a lot following the Liberation Day, and actually on the day of Liberation Day and the few days afterwards, was a lot of decision takers calling us and first of all asking us what was going to happen. We're not that close to Trump, but also starting to think about how they can build a mitigation plan, to what was going to happen. So a lot of people have been looking at, okay, what their sourcing routes are, which countries are they buying from, and then at Advancy we started to have projects about, okay, let's look at your supply chain and let's identify mitigation strategy on specific products that you're sourcing, and identifying people that would be doing the same product in India, in Europe, in Brazil, wherever, and to start already to have discussion with those guys to qualify those products, to make sure that if something's happening of the order of what was the initial discussion with China, which was 150% of tariff, they could have a mitigation plan that they could click, and that they could divert their sourcing routes accordingly. And so that's really what we've seen that has been happening in terms of real impact. There's been also a lot of people that have been over purchasing at some point ahead of the tariff. There is in the chemical space, but also elsewhere. And again, I think, I'm sure you will echo that as well, there's a lot of people that just wait and see to really understand what's happening. They're trying to really better understand what would be the impact, but until there's a real policy which is implemented, people are still trying to figure out how they can mitigate any risk.
So I guess in some cases even being ready to face higher costs, but will mitigate the risk.
Exactly, yeah, and to try to, because again the thing is, if you look at, because the thing which would be complicated later on is, again, it seems that each and every country would have a tariff which would be different depending on whatever criteria they've used, and so then it's going to be a little bit of a game of trying to optimize your sourcing route based out of, first of all, what the raw materials are available, which is not in each and every country, and then to try to balance exposure to China, to India, to Vietnam, or to Europe and wherever you're sourcing from. But that I think is going to be the end game if they really push through those tariffs.
Makes sense.
Yep.
What do you think, Silvestre, the pick 3 top concerns or agenda items for the chemical companies?
Yeah, for sure. I mean, the first one is easy, is tariff. Obviously, we just talked about it. The second one, at least in my opinion, is Chinese competition, which has been coming a lot across the discussion. And I know we're in the US, and a lot of the companies we're going to talk about are US-centric. But again, US is not doing great right now, but if you look at Europe, if you look at Asia, there's been, as I said at the beginning, a lot of competition there, mostly driven by Chinese capacity addition, and that has been a big demand. And then the third one is echoing what you were saying, which is demand recovery. We're talking about demand in the US, but it's also going to be demand in Europe, demand in Asia, and how to place how to place different volumes across the globe, depending on how the demand will recover as well.
Yeah, I mean, I guess tariffs and demand are pretty obvious ones because I had those on my list too. But the one thing I'll also add here is I think sustainability is still a priority for the industry. We just did a cover story where I didn't write it, one of my colleagues did, where we took a look at company policies on sustainability and investments and innovation around sustainability. And most of the companies, I think most of the ones we talked to were in Europe, but most of the companies did say it was still a major priority. So I would say that's a third one. And another one, which I'll probably come back to a little bit later, that I'll just add on here so that we're not constantly saying the same thing, is this sort of relates to tariffs, but I think companies are paying a lot of attention to industrial policy. And tariffs are a piece of that, but they're only one piece of that. I mean, if you look at sort of the Trump administration and the Biden administration, there's kind of a through line of industrial policy of bringing manufacturing back to the U.S. A lot of this capacity overhang in China really doesn't make sense unless you evaluate it through the lens of Chinese industrial policy. There's the EU Green Deal. So I think that is also something that companies are really going to be having their eye on. I mean, I referenced first quarter earnings before. It really jumped out at me. You know, I've been covering the industry for 15 years, and Q1 earnings, there was so much discussion of policy. Tariffs obviously being the biggest thing, but not really the only thing. And I just think the intersection of the industry and policy is going to be a much bigger theme going forward.
Okay.
On that policy, there are some feelings that some of the current U.S. industrial policy would be friendlier to business, less regulatory. So there are some positive things about this. The issue is, in some ways, what you said about ESG and recycling. I think that there is a public posture and there is the actual posture.
Sure.
And so many people are trying not to make big statements, not to get in the crosshairs of government, but they really changed their actual policy. They still make their investments. Recycling seems to be still okay.
Yeah.
Is the carbon, the moment you talk about carbon capture, you talk about EV, electric vehicles, you talk about other things, then you get into issues that are more touchy and that they don't want to get over the parapet and be shot at. So they're making less. One issue about China, which I'd love to hear your point of view, is rare earths and the way that there is this, the domination China historically has had in owning and buying across the globe and now limiting some of the exports. What do you think and how important that is for the chemical?
Yeah, I mean, I think it's obviously important for the energy transition. It's important obviously for companies that are in in the rare earth supply chain. I would say that I have a level of cautious optimism that the West or the world outside of China can catch up. I mean, one of the things, I've had conversations with, friends about this sometimes, and they'll have read some article about rare earths, and they'll be like, oh, China dominates the rare earths market. And I'm like, well, the thing is, despite what they're called, rare earths are not actually that rare, right? Like, there's
Somewhat rare.
yeah, they're somewhat rare. They're not really super rare. I mean, there is a big rare earth deposit in, Mountain Pass in California, and the company that is, I think it's MP Materials now. It used to be Molycorp multiple iterations ago. Yeah, they're developing that mine. So I think the ability to catch up is there. There's certain questions around know-how and expertise, because China has really built up a lot of expertise in these areas. I remember talking about battery materials. One of the big lithium producers, I don't remember which one, was trying to build out a lithium processing facility in Australia, and they ran into a bunch of delays because they didn't have the personnel to open up the facility. So
Experienced personnel.
yeah, and they had to import people from China. Yeah, but I think these are problems that can be overcome. There are resources in the U.S. There are resources in Europe. Really, the big hurdles, I would say, are policy, as we've been talking about. I mean, the Trump administration takes a very different tack towards sort of decarbonization, obviously, than the Biden administration did. And whatever you want to make of that on is this a good or bad policy level, the sudden shifts are bad for business. And the other thing really is price signals. So we've seen massive swings in lithium prices, for example, cratered over the past 18, 24 months. So I think those are really the issues, but there's nothing foreordained about China dominating these industries. That's what I would say.
As we're talking about China, it's worth looking at it from a bit of a broader perspective on the role that China will have in chemicals. Of course, rare earth is one aspect, but
Sure.
there's a lot of other verticals and products where they have been and remain a relevant player, and they will, however it will play out for them, it will then determine the rest of the developments across Europe and the US, I think globally. So I want to maybe spend a couple of minutes on China more broadly, how you think the relationship with the US will develop, and their role as a key player in the chemical industry.
Yeah, for sure. I mean, on rare earths, I fully agree. I think the resources are here. You can tap them if you want in the US, in Europe, and elsewhere. But it's really the expertise, as you said, which I think is going to be a bottleneck. I mean, China is a great topic. So China is pretty straightforward because they publish what they do and what they want to do. So I was actually chatting with our colleagues in China yesterday to make sure that what I'm saying is supported by facts. But they were so in 2015 they put a plan which was China 2025, and they identified 10 segments in which they wanted to be the leaders in the next 10 years. I will not list the 10 of them, but they've delivered most of that. Some of them was in new energy, some of that was in equipment, some of that was in medicine and whatnot. Now, Chairman Xi he expressed clearly the new strategic objective of China, which is, let's say, for the next 10 years. And what they've done is that now they streamlined from 10 to 6, because 4 of the 10 they already dominated now.
So they achieved the 4.
They achieved the 4, and there is still 6 remaining where they want to be the leaders, which are the following. So, information technology, AI, quantum science and technology, biotechnology, new energy, and new materials. And so EV are going to be in a new energy and also in some cases in new materials. And that's really the segments in which they want to invest, and the segments in which they're putting a lot of public money at work, buying companies, in some cases in America, in Europe, hiring talents, and so on and so forth. And they're benefiting obviously from a lot of things, but just to simplify, I mean, first of all, they have a very clear agenda, which I've just outlined at a very high level. They got also a lot of subsidies and money from the state, which is helping. And then they also have something which is really unique, which is the population. And I was also checking that a few days ago. If you look at STEM, so just people that complete a STEM degree in China, so if you take all the STEM students from America, Germany, France, and Japan, and you double that, it's still below what China is producing in terms of STEM engineers or talent per year. So again, they got a lot of talents as well who are really working eventually in those industries, and so they've been really putting a lot of emphasis into those segments, and that's coming back to the expertise topic that you were mentioning again. Yes, in some cases they have rare earth or whatever on their land that they can work with, but if you look, for example, at nickel, which is a very good example, and again I may be wrong, but they have almost no nickel production in China, but they've been doing a lot of partnership in Southeast Asia to get access to the mines, and then they do the refinery themselves in some state-owned company that they would be doing in JV between different governments. So again, the long story short is they're really active, they really have an agenda, they know where they want to be the leaders, and the reality, at least in my opinion, is that if you look at the last 10 years, they've really been delivering what they were aiming to do. Not always with great success, but at least they've been really putting the efforts.
I also think that this is a general thing. This whole talent drain that we are beginning to experience.
I agree.
It's a self-inflicted stupid war. We are allowing an entire generation of scientists to be lured away from Europe, from China, to go away or go back to China or other places for nothing. It, to me, is one of the most incredible cell phone goals that we could do. And it's stupid, it's damaging, and it has potentially dramatic effect. No, it's not just scientific, it's not just for medical things, but anything, new technology, new materials. It's foundational, and we are losing it, and we're going to be losing it. And once you do it, it will take years to get them back, if any. So.
No, I agree. And if you just look at this room, I think half of us are coming from abroad. And I think on the panel, 3/4 have been born abroad, and in the audience, I think half or so have been born abroad. So I think you're right. I mean, one of the key strengths of the US is to attract talent, and if the policy are changing, and and it's even more. It's even more ridiculous than that, which is in some cases, people are coming from abroad, they come here, they study, they got great diploma, and then they cut the visa, and then they need to go back to China, to India, or to wherever, and then they get all the intelligence that they've been, learning here, and then they're working into companies abroad to help, foreign companies to take market share versus American firm.
One of the things about China, and this is maybe, I don't know if you agree, but all this talk about overcapacity and everything else, it's somewhat mitigated by some of the policies that are saying to reduce the Chinese import ability outside. So I think China is going to have some issues in China with the overcapacity they built with some of the plants if they do not have the possibility to sell or to process outside some of their production. I don't know if that is.
Yeah, I would say that is the case. I think if you're sort of looking at the impact, and here you're talking, I mean, mostly about the sort of capacity overhang in like pet chems.
Yes.
Some basic. Yeah, some of the basic materials. Yeah. I mean, and I was actually looking at some figures earlier, and the percentages are pretty wild. I mean, in terms of the overcapacity, the supply-demand gap in China, it's double-digit percentages. I think in some product chains, 20 or 30% already, and forecast to go up from here as the decade progresses. But I think for the industry itself, for the producers, this is a really big problem for other North Asian producers. Japan, Korea, and for Europe, it's yet another problem for Europe, maybe. For the U.S., we've still got the cost advantage. In the U.S., there's still the cost advantage with shale gas. So, to the extent that the U.S. is trying to export product, leaving tariffs or whatever impact that might have aside, obviously having to compete with Chinese product could be an issue. But I think the industry in the U.S. is still in a relatively advantaged position. I believe there is some data that S&P analysts, our parent company, have put out indicating that the shale gas advantage could start to dissipate in the next 10 or 15 years, but at least for the next decade, U.S. producers are going to be in a relatively they're going to be in a relatively cost-advantaged position. So I think in the U.S. it's a challenge. It's suboptimal, but it's manageable. I think, if you're producing polyethylene in Japan, then that's a big problem.
And I was also looking at data actually yesterday on that, and I think the best example actually, which is a bit outside of our world, but which is the EV production in the
Sure.
in China. So again, they decided to be the leaders in EV, so they put a lot of money at work there. And let's say if you wanted to open your company doing EV in China 10 years ago, you had a lot of subsidies from the government. And so when you just look at that, if you look at 2019, there was 500 companies in China that were doing EVs. And the reality in China is that I think they really believe in Darwinism, economic Darwinism. And so they went from 500 companies that were all fighting each other to about 150 right now. And those would further reduce in the coming years to maybe 20 or 25 by 2030 or 2040 or whatever the forecast may be. But again, that's really the way that they've been behaving, and it's true as well in the petchem, and it's true as well in the chemical industry. When we look at the last big wave in 2016, 2017, where they really started to hit hard on the very basic building block of chemical, they've started to create a lot of chemicals company right and left.
Yeah.
And there was overcapacity by, as you said, 30, 40, 50%. And then at some point, some were out of business because they were just not making money, and they've also been implementing some policy, on the fact that people needed to be on the chemical parks, and so some companies that were not on chemical park had to relocate or to shut down. So again, I think it's by waves. There is a moment where they let a lot of mushroom to come, and then at some point they put a policy, or there is just not enough food for everybody, and then there is an economic Darwinism, which is
they cull it a little bit.
Yeah, exactly.
Yeah. I would actually just want to add one more thing on the China discussion, which is there was at the World Petrochemical Conference, there was a presentation. I was not there, but I had read some of our coverage of it about the Chinese industry, and there was a quote from the 5-year plan, and of course now I can't remember the exact quote, but the sort of the takeaway of it was, I read that and I thought to myself, man, if I was producing specialty chemicals in North America or Europe right now, this would terrify me, because it really, it was something around the idea of, okay, we've got all this petchems capacity in there now. We want to move into higher value applications. We want to move downstream. And I mean, as you say, they come out there and they say what they're going to do. Yeah. So they're going to try to do that. So, one wonders, I mean, leaving aside stuff like battery materials where they've already got the domination, one wonders, are they going to start moving into other specialty chemical value chains? Are they going to move into functional ingredients? Are they going to move into additives? I mean, where does this stop? I think the ambition is pretty clearly there.
Yeah, I agree. And I mean, just to echo that, I mean, new materials is one of the 6 targets they have, and that's exactly that in specialty polymers, and they've been doing it. I mean, if you look at, I know there is legal people in the room, but I can name company. If you look at Chinese companies, some of them have just looked at what DSM was doing, what Scienco or Solvay are doing in terms of very high performance polymers, and they've been replicating the same in China. And so there is, I mean, it's not the full value chain that they master, but there is more and more segment that they do touch, and the best example is the nylon 66, where they've been going after nylon 66 for years, and now they've really been able to crack the code. And
Ascend is bankrupt.
Ascend is a legendary name. We can discuss that. Let's talk about the outlook. I mean, so we bring you back to the rest of the year. First, simple questions. What do you think it does to the recession today?
Yeah, I was actually reading some of the economic analysis that we put out earlier. So I'll default to that. I think they were looking at a 2.2% GDP growth globally and 1.3% in the U.S. PMIs are relatively weak, but still, at least in the U.S., barely in positive territory. And the odds of I think the phrase that they used, and I'll just quote this here, and this is S&P Global Market Intelligence Economic Analysis. No recession, but it's a close call. And I think that about sums it up.
Yeah.
On the other hand, if we think about the projection for GDP growth in January was 2.8% for the US. So now we're talking less than.
Oh yeah. I mean,
So-
it's gone way down from
I mean,
January.
really,
Yeah,
so
for
it
sure.
may be close call, but it's still dramatically less.
Yeah, I mean, look, Federico, what you said earlier. I know we had spoken for my M&A story a couple of months ago, and I mean, the difference in outlook from the beginning of the year to March, April is dramatic, and maybe things are settling out now, or maybe we're just in a calm before the storm.
Yeah.
Well, it's kind of sad when you wake up in the morning and you're afraid to look at your phone.
Yeah.
What's going on now? What happened? What happened? So you just look at it. Sorry.
No, I agree, and I mean the biggest thing, and coming back to the tariff discussion, which is, I mean, everything could flip around by one or two decisions of we're going to do something big and then put the economy in recession. So,
But look, what is happening today? It's an interesting thing. Last week, a guy decides to call the process taco, right? Trump always chickens out. It explodes in the social media. One day, the next day, the tribunal decides he cannot change the tariffs, but he can change aluminum and steel. He can still do that.
Yeah.
They were 25%, he decides to change it to 50% because he can. I mean, what kind of a rational thing are you thinking of? Because you're called taco? I mean, to me, that's the very difficult thing to understand. Because it's not a rational thing. You say, I do this, therefore I will get that, and I protect this. And apparently, if you think about it, they're protecting the steel industry, but that's relatively small to the damage it will do to a number of other industries, aluminum and other things that are, this is not necessarily chemical. I was mentioning this as one of the frustrating ones.
no, I agree with you. I mean, a lot of, but it's really about just not having clarity again. Coming back to the first topic, and that's I think what everybody here is, in the room is also looking for, which is to have clear answers on what's going to happen in the world or elsewhere, and when you have sudden movement of humor which change decision on policy or on the economy, it's quite damaging.
So if we build on the demand story, going back to the demand point that we started with, clearly, the overall macro environment is not very exciting at best. What does it mean in terms of actual chemical demand? Probably there's some differentiation to be made across different product groups and geographies. Maybe there's something maybe more optimistic to share there.
For sure. I mean, I think there is, I think half of the room is investors, so I think everybody is looking for safe bets or places which are quite resilient. I mean, there's definitely pockets, maybe here it's very American-centric, but pockets which are still very resilient with very sound demand. We think about the water space, hygiene, sanitization, the food ecosystem as well is pretty resilient too, and so those industries have been holding up quite nicely. There's still pockets of strong growth when you also come back to the discussion around investments and policy. Again, semiconductor is a clear sector which is obviously experiencing a lot of tailwinds from Trump 1 to Biden to Trump 2. You also have anything which is related to electrification. So again, I mean, one of the big things which is happening right now is obviously the surge of AI, and AI drives electric consumption, and so anything which is related to that ecosystem is also benefiting from that. And then a couple of other sub-segments which would be things that you would know, I mean, biomaterials and whatnot. So there's still areas which are very positive. Yet when we come back on the big fundamentals of the chemical industry, I mean, I think a lot of people will still echo that the interest rates are still quite high. Construction demand is still quite low. Automotive production is also pretty low these days. And the consumption is also driving the chemical demand. And again, I mean, we talked about the PMI. We can also look at other indicators about how confident the American population feel. It's really miles ahead from Europe, to be frank, but it's still much lower than what it used to be 2 or 3 years ago. So I think to come back to also what you were saying at the beginning, the consumer spending is also going to be one of the key indicators to look at for the next few months.
That's a great point about the consumer. I mean, the U.S. consumer has really propped up the industry over the past few years, and that does seem to be flagging. Just a couple more sectors to add on to what you were talking about there. I mean, this is sort of related to your point about semiconductors and electronic materials, which I think is the first one that I thought of when I was trying to think of sectors where there's a more positive outlook, but also anything related to data centers.
Yeah.
And that could be, electronic materials. There's construction materials that go into data centers, a lot of heating and cooling, air conditioning. Yeah, Ecolab has a whole big business around serving data centers, and I think it's been a pretty big growth driver for them. So data centers is a big one. I mean, I think another one that has, I think, performed okay is packaging. Probably because we're all ordering so much stuff on the internet still, I would guess. And one more I'll mention, just because I know there's a lot of investors in the audience, is I think distribution. Chemical distribution assets, I think, are still pretty. I mean, obviously they're tied to their end markets, so they might not be performing super well. But I think distribution continues to take an ever larger share of sales from some of the big producers. So that's probably another one that looks okay.
And I forgot another one, which is obvious as well, which is defense. Defense has been. I mean, we've been working across a lot of different industries who are exposed to defense in some cases, and the defense sector has still been pretty hot these days, as you've been experiencing.
Yeah, and that's especially probably in Europe relative to what it was, I would think.
Yeah, in Europe, but even in the US, because there's been a lot of things that have been sent across the ocean. So.
I read today that Blackstone had invested up to $100 billion on their different funds into AI and data centers and that kind of stuff. So it's an interesting real. We're gonna have open it up into maybe for questions, but maybe the last question for you from an M&A point of view. How do you see the rest of the year in M&A, and what are the areas that are going to be harder M&A wise, not just domestic wise?
For sure, happy to take this one. Coming back a little bit and wrapping up what I was saying at the beginning. So again, entering 25, everybody was very positive about the year to come. In Q1, at Advancy, we've been doing 21 sell-side engagement, so companies that were preparing to come to market for 25, which was, to be candid, or record number for the first quarter. And obviously, Liberation Day hit in April, and that stopped a lot of processes or postponed a lot of processes, mostly because of uncertainty and the fact that nobody could launch a process not knowing what was going to happen to the supply chain, what was going to happen to the raw material costs, or what was going to happen to the consumer demand as well, following all that. So that really put a stop to the processes that were being gearing up. Not all of them, but a lot of them. And if we look at right now, let's say to date, my view is really the following. There is, first of all, a very limited number of deals in the market in terms of large cap. So if we say large cap is above 100 million EBITDA, there is less than a handful which are in market. I mean, one which is public is that DuPont is considering selling Kevlar and Nomex. There's been a couple of articles on that, and that's probably the biggest deal in the US in market right now. There's been a deal in Catalyst that has just been done with UOP and Johnson Matthey, which has been published. Ecovist also is reviewing a strategic option, as they've been saying on the investor presentation. But that's pretty much it when you look at very, very big large cap.
And BASF.
And BASF in Europe in that space. Then when you look at a small cap, which we define, let's say, as below 20 million EBITDA, here there is maybe half a dozen of deals in market in the chemical space, which is really not a lot, but that's the number to date. And those deals, to be transparent, are mostly, small companies in the US, family-owned or small carve-outs, which are not really impacted by the tariff or by the uncertainty because they produce something in America, which is a bit more insulated, and there is a bit less of a macro driver dynamic there. And then when you look at mid-cap, which would be between 20 and 100, there is almost nothing. Like, there is almost no processes that are out there. There is, of course, sometimes a little bit of bilateral discussion with a company talking to another and things like that, but it's much more on a case-by-case basis. And really, I mean, there is almost nothing. And again, if I were in in December 2024, I would have said very differently from what we're living through right now. Obviously, because I think nobody really took serious President Trump when he said that he would be implementing tariff to that degree. So that's the view right now. And then, of course, the question is, what's going to happen for the next 6 months? Again, sharing our perspective there, I think as a firm at Advancy, we're a little bit in advance of phase, exactly as you would be as well, because we would be seeing, or we would be called when there is a process which is being prepped and which is being at least in the pipe. And so, again, if you look at what's being prepped right now in the US, there's not that much. It's a couple of deals here and there which we know of, and I'm sure if collectively we're all discussing, we will identify a handful of others, but it's still pretty low. And the reasons are, I think, the following. The first one is, if you look at the PE-backed assets, so assets which are owned by private equity firm, a lot of the assets in that category are companies which were thinking that 2025 would be the year of recovery. And so some of them have started to work on selling the business in the Q1, hoping to see green shoots of demand in 2025. And unfortunately, as we just said, the demand for 25, at least from a volumetric standpoint, macro level is going to be quite sluggish. There's counterexample and all that, but it's still going to be not the strongest of the years. And I think everybody's waiting to see a little bit of more recovery before launching a process from a private equity standpoint, especially because some of those assets have been bought in 2021, 2022, when the markets were very hot. And then on the corporate standpoint, coming back to what you are saying as well, Federico, a lot of big corporates have been rethinking their portfolio. And at the end of the day, what came out of all those strategic thinking is the fact that they were really favoring European carve-outs. And so when you look at what has been announced, LyondellBasell, BP, Shell, Sabic, Dow, all those guys have been thinking about carving out, divesting, spinning, or at least finding a solution for the European operations. Again, all that is public. And that's really the state of the big American companies or the multinationals. And the couple of very good businesses which are in their portfolio and which is not core, it's rather a spin than a sale. And that's what Honeywell is trying to do. That's what DuPont also is going to do with some of their specific business units. And that's a little bit of the state right now, at least from my perspective. I don't know if you see the rest.
I see another couple of other things. One is that we have a very strong infrastructure advisory team, and we see Dow and others that are really trying to monetize some of the infrastructure, which is good for us at least. So selling industrial parts, selling the logistic chain, selling the trains rather than the barges or also or the ports. So there are ways that some people are trying to raise money. And the second is that some of these they're trying to sell, but actually in effect they probably will shut down things to improve the profitability of the rest. And the problem in Europe is it's very difficult to shut down assets. There are economic costs, social costs that are huge.
And political.
So political costs. So it's not just easy to say, we're going to shut it down. We shut it down, then you pay. And so there are other considerations that are above and beyond this. Then,
Yeah, just a couple things to add on to that. One, with regard to private equity, I've been hearing for probably at least 2 years now that there's a large number of private equity assets that are going to come to market that were bought back in the second half of the 2010s that are still being held. And, I mean, I did some research on this a while ago, and there are actually a lot of those assets, and it keeps not happening for the reasons we've all outlined. So I would not be very optimistic about that happening this year, but I do wonder, if and when it is going to happen, and at what point private equity just says, hey, we got to do it. No. The other thing I'll just mention about the sort of the European asset sales is, I think the fact that Sabic in particular is looking at reviewing their European assets is a bad sign for a lot of, say, for Dow or BP or LyondellBasell, the companies that are looking at selling European assets, because, I mean, when I asked people about, who's going to buy these assets? Who wants to buy a petchem asset in Europe? They'd say, well, maybe it could be a sovereign wealth fund from the Middle East or something like that. And that was always one of the potential answers. And the fact that SABIC, which is basically a Middle Eastern state-owned enterprise, is saying we want to get out of Europe too, that would give me a little pause.
So there have been some.
Yeah, sure.
Some. Domenico, any thoughts?
I think this was very helpful for me.
Well, why don't we
Cautious
open
of
it up
time.
for questions
open.
here? So we use this time. Please mention your name and then ask better questions. Really open.
Charlie Rose from Cruiser Capital.
Can you speak louder?
I think the first issue is that you have a lot of companies that have to do some balance sheet repair. Dow Chemical, LyondellBasell, Celanese, FMC, American Vanguard. You go through a whole list of companies. They all have cash flow problems. They have dividend issues. They have all types of issues, financial and operational issues, that are on the minds of public investors. So it's not just carving out their European assets. They've gotten themselves back to where they were back in the last recession without even a recession. So it's like if you don't even have a recession and you have these issues being magnified. Celanese did a stupid deal, buying something from DuPont at almost 14.5 times EBITDA, and the stock's gone from 150 to 50. Dow Chemical goes out, does all types. They're back to their stupidity has been replicated once again. So the first question I have a couple of issues, but the first issue you're not talking about is, and you can go back to Ineos. Ineos looks, I've called on Radcliffe. I've called on the Koch brothers. All of them are sitting with assets which they acquired during this low interest rate period and low inflation period. And now they're choking. They're literally choking. Ineos is choking.
But they're selling. Ineos is selling.
They're all trying to sell something to relieve their balance sheet. But to whom? So the question I have for you, how do you see that, to use your expression, you're smart, I'm just following this industry for the last few days. So the question
Somehow I doubt that.
I've been doing this 50 years. So the question,
Kindergarten.
I'm 73, I'm turning 73, I've been doing this since I'm 25. So the question really becomes, how do you see the unraveling? How do you see this process going forward? That's the first issue, because if you don't have a balance sheet,
I agree.
you're not functioning. You're not functioning. So I don't care all this other shit you're talking about, tariffs, the outlook. If you don't have a balance sheet, you're not functional. So talk about that issue, the first issue. I think that's the first issue. Then I'll get to the second issue. Talk about the first issue, which is the balance sheet repair. How do you see that going on for Dow, Lyondell, Celanese? You can go through all of them. These balance sheets look like, they're crippled again, and there's no recession.
I think again it depends what you're looking at, and it's also, as you said, for Celanese, just to take this example about the decision that they made a couple of years ago or even 10 years ago. I mean, to take another example, if you look at Westlake, I mean, those guys, they've been a little bit more careful with their balance sheet at some point. And they're a little bit less in a situation where they really need to sell. I'm not saying that all the deals they've done them right and they've bought at the right price and so on, but they've been a little bit more careful at least with cash as well as with debt. And you're right. I mean, if you look at the names you mentioned, I mean, all of them are thinking about how they can rethink their asset base, their portfolio, and unleash or carve out sometimes even businesses that they just bought just to get some debt relief. Yeah, exactly. And in some cases, I mean, we talked a lot about American companies, but you can also look at Elementis, which I'm sure you followed as well. What they've done with the talc, buying the talc very expensive, not being able to do anything with it, and now selling it for
relatively cheap.
Very, very cheaply. But that's just, in my opinion, in some cases, just management decision which turned out to be wrong. Another good example as well was Cabot with Norit, where they bought Norit for $1 billion and they sold it for $100 million 7 years afterwards. So I think there is a lot of topics, as you said. So first of all, it's how the company have been managed. some people have been a little bit too aggressive in terms of selling the dreams to investors as well. In some cases, few years back, to be able to show that they were able to grow, to be acquisitive, to do M&A, and some of them have been congratulated through that. I mean, good example is Celanese. The Celanese CEO does the deal of DuPont, become CEO of the year, and we see the situation, unfortunately, they are in right now. So I think it's really what you said, which is, again, a little bit of a balance between, again, people that try to please investors by buying growth and by being acquisitive, and unfortunately, now that I think we said the tide is going down, are a little bit in a difficult position.
Sound like Warren Buffett, when the tide goes down, who's dressed?
Exactly. Yeah.
Who's wearing clothes? The second issue, which is much more dangerous.
You agree, Vincent?
Yeah, I mean, the only thing I would add to that is, this is, I wouldn't call this a full-on solution to the problem that you outlined, but there are companies now that are scaling back CapEx. I mean, Dow, I think, is scaling it back by $1 billion. Lyondell, Bazell has announced, and Eastern Chemical, I think, have also announced scaling back CapEx. So, I mean, that's...
They scaled back CapEx and then they raised their dividends.
Yes.
Can you imagine such nonsense?
Well, I mean, I think it's... Yeah, I mean, they're trying to appeal to the investor base. They
do that for you?
Yeah,
They're not
yeah.
doing it for me, they're doing it to hurt themselves.
Yeah.
Then the second thing you have, which is even more interesting, is you have a number of companies that have one product line and their stocks are at low levels. Hawaiian Engineered Products, for example, we talked about. They're basically a one product.
Like Carbon Black and
Carbon Black, it's a one product company. The management's got an IQ below 0, and the stock sells at a very low price.
how do you really feel it?
And basically, you have a number of these type of companies, what they call one product companies. Ashland's collapsed.
Ashland has more than one product, but
It's a portfolio of ingredients,
yeah.
whatever you want to call it. I was just with them last week, so these are basically tuck-ins to someone else. They're add-ons to someone else. Why doesn't that play a role in the M&A world? When these are really tuck-ins to some larger entity.
Does anyone want to get into Carbon Black?
Maybe they do. I don't know.
I mean, you mentioned it right. That's the first thing that comes into my side.
Into personal care ingredients. I don't. But all I'm saying is that these are business units that have additive value to other industries. Whether you and I want to get into carbon black, that's no offense to you. You and I may not get into that business, but there are people that want to be in that carbon black business for various reasons. It's not just in tires.
Yeah.
It's in other formulations for coatings, gloves.
Sure.
So the question is, there are a whole bunch of these companies that have collapsed in value, and they represent significant value to other larger
But
companies.
you're gonna see
There have to be
activity in
M&A.
M&A. You're gonna see also new management comes in. A number of these companies have had new management, and they're coming in without being tied to what happened before. I gotta believe that this is gonna be a good time going forward.
Maybe.
Some of these
The boards don't.
Yeah,
do
and-
that.
and-
Go ahead.
Oh, I'm called you, and I wanted to say how encouraging all this pessimism I'm hearing. And you talked about Jim Ratcliffe, the way he built INEOS. He may be struggling a bit today, but the way he built INEOS was coming in with capital when everything was unloved and buying bits of old ICI, right?
Right.
Well, for nothing, for below, miles below any hint of replacement cost. And I think something has to happen. New capital will appear. I think anyone who does have a decent balance sheet, the strongest will get stronger. And I always look back to the sponsors who bought during the great financial crisis. Those vintage deals were the best returns they ever had. So someone's going to blink, and the price will probably effectively in a dislocation of price at the moment. Deals are just going to start getting done cheaper. People are trying clever tricks like continuation funds and secondary deals. All of this is disguising what has to happen, which is just a repricing downwards. And someone's going to make, whoever dives in, this is a fantastic time. I agree with you.
I spent time with the CEO of a major chemical company recently, and they were talking about preparing now to do this study. So they say this is the time to study and the time to be proactive, not wait for a process, but go and knock at the door. Go and knock, and you see more of this And I kind of believe that this is going to be a good time before too long.
You haven't talked about Japan, I don't think at all, and so I think the Japanese guys are going to be anxious. I think Japan has, declining population, pretty low GDP, great desire, but cheap capital, great desire to go outwards. So I think you're going to see Japanese.
We have seen now in Japan, this has been a record year for our Japanese parent, Daiwa. And we see a lot of Japanese companies for the first time being active both in the buy side, but also the sell side, and not of the asset. In the past was they are selling things that are in trouble.
Yep. So you've got Spicer's looking at deals in Japan,
Right.
and then the remaining Japanese companies going out and looking in the US.
Right.
Yeah, a good example is AOC.
LBC as well.
AOC in
Yeah,
groups and Nippon Paint was
exactly.
an acquisition that people did not really think of, the resins and the like, but they did it. We saw, like playing a prior job, we saw homology to them, and there was logic in paint. You were talking resin, which it changes in the
Was it
Nippon-
Cabot
Nippon Steel's a
Microelectronics?
big, big
Yeah,
headline, but
exactly,
There's
yeah.
going to be more of that stuff.
Yeah. But at the end of the day, it's coming back to valuations. I mean, if we take an example, right now we're working on the tech privates, so there is activity on the tech private side of things. The tech private is always very risky to really get a deal done, and that's also maybe one of the reasons why you're not seeing a lot of them happening, because there's people working on it, some of the very big private equity firm, but at the end of the day, they cannot reach an agreement on valuation or with shareholders or with the board or whatever the reason would be. But there is really people thinking through tech private of companies that would be, as you mentioned, a business unit of a bigger conglomerate, or companies that would have different segments which don't really fit together, and where private equity could take the business, shelve it, think about it, do some of the parts, improving some pieces, selling other ones, and
some companies have no reason to be up.
Yeah.
You're a small company, nobody follows you. Look, it's Ferro, Home Nova, InnoFoster, a bunch of companies that were below the 2 billion or so people going to take it. One more question, and then we can go and have a cocktail, so you won't think about this, and we'll have to lift your spirits.
Cheer us up.
Anybody? But look, thank you very much for coming. It's really a pleasure, and stick around, ask any questions you want with us, and go and enjoy yourself on the terrace.
thank you.